Hello everyone, welcome back to the channel. André Cardoso here. I hope you had a nice weekend to rest and I wish you all a beautiful trading week ahead. So for today I want to update and to adjust some of these patterns for you. I hope you take some useful information from the content that I share in the channel. So let's start with the dollar versus the Chinese yuan. We had some data this morning, actually overnight for the United States for sure. Inflation rate 0.6 against the forecast of 0.7, so that's negative for China. So we saw a reaction, or almost an immediate reaction to the upside from the dollar versus the Chinese yuan. Basically, we are now threatening the monthly fractal support level 7.0878. So that's the previous fractal support for the dollar versus the Chinese yuan. Let's jump into a daily time frame chart. I want to show you also this pattern. The market starts to unfold. Actually, I believe the market's already completed what we may call an ending diagonal. Now that we approach this fractal support level, I believe it may work as an ending diagonal. And we have also a bullish shark pattern at the golden Fibonacci extension level. So as we can see, the market finds the golden Fibonacci, the 161.8% Fibonacci level, and since then was incapable to break below these levels, these lows. So we are already trading at 712.21. So that I believe there's room for this pair to move higher, at least towards the default target 7.1914. Exactly. So that's the 50% Fibonacci retracement level, the default target for this pattern. This is not the main reason why I started this video, of course. I think I should mention this pair because we have inflation rate which may influence the pair, of course, but let's also delve into the usual pairs that I tend to share with you here. Let me change to my red list. Let's start with the Dixie. I was tracking the possibility, and I still track the possibility of a bullish crab pattern. This pattern will unfold if the price breaks the recent support level. So we need to see a violation of these 151 cents. If the dollar finds a way to form this sequence, it may offer a nice opportunity to trade higher. At this point, I think the market is consolidating. Let's see how the market unfolds from here. But we have a clear range between a daily fractal resistance 101.91 and the most recent support, or the fractal support, at 151. Before going further, monthly fractal support 160, we remain threatening this major support level for the Dixie. The cable, and let's start decreasing our time frame charts. We have a projection for a symmetrical pattern which points to the previous structure resistance 130.45. So I admit a move towards this previous resistance level. That also completes a symmetrical pattern. I admit a move or an attempt to react higher after this move to the downside and after completing that specific sequence, the symmetrical pattern. The same may happen for the dollar versus for the euro versus the dollar, which may be pushed towards 109.80. That's a symmetrical projection also for the euro dollar. That converges also with the 38% Fibonacci retracement level 109.71, which usually is a strong Fibonacci retracement level to consider. The same for the Aussie, which has more heavy reaction. Let's say we are already trading the very close to 38% Fibonacci level. These levels may act as a pressure level for the Aussie, as a pressure and level of support. Of course, we have also symmetrical projection 66.26 for the Aussie. The New Zealand already completed the symmetrical pattern and it's already trading the 38% Fibonacci retracement level. Let's see how the market reacts. Note that we are breaking this ascending channel. The market can actually extend even lower. We have also the Aussie versus the New Zealand. I called your attention a few weeks ago. Last week, I called your attention to this potential pattern, the symmetrical ABCD pattern, converging with the Gartley pattern, also known as 222 bullish Gartley pattern, projected at 107.54. That's the default target, or the default projection, let's say, for the completion of both of these patterns, the Gartley pattern and the symmetrical ABCD pattern. We have an attempt to break lower. This may work as a nice, that will depend on the strength of this move to the upside, but if the market extends to the previous resistance level with some strength, we may see this as a V-shaped recovery. So I admit at this point a retest of the daily fractal, and eventually the market may unfold into a head and shoulders pattern formation, you know. So if that happens, let's see how the market will unfold from here. But I need to see a pattern, you know, in order to put my risk or put my money at risk. If the price unfolds into an edge and shoulders, we may consider a move to the upside above the daily fractal resistance. Of course, we are far away from that pattern to start to unfold. If the market prints a new lower low, that pattern will vanish. But assuming this nice bounce in this, and the New Zealand versus the dollar also trading lower, I will not be surprised to see this specific pair attempting a retest of the previous resistance level, and if that happens, that may unfold into an edge and shoulders pattern. But for now, I'm focused on the same possibility, the Gartley and the symmetrical pattern projected below the support. That's my main objective, to see a push to lower prices. If that doesn't happen, we need to see how the market will unfold, and as I said, the potential inverted edge and shoulders may trigger that move. The dollar versus the Norwegian krone, we had a bullish outbat pattern. We discussed this pattern before multiple times before the completion. 1044, 113% Fibonacci extension level, and once the price completes that pattern, and we have a perfect nailed outbat pattern for the Norwegian krone, we saw this violent move to the upside. We are also approaching what we consider the second target for this pattern. So that represents nothing more than 3.48% above our entry point, basically the 61.8% Fibonacci retracement level, 1087, that's the 61.8, the second target for the pattern. At this point, I always suggest to trail your position. So if you have your stops at break even, you can adjust a little bit your stops and start to trade it with a dynamic stop. Every move the market, every pip, let's say, the market prints above the golden Fibonacci level, your stops will automatically trail that move, which will help you to, you know, to track and maximize your profits and minimize, of course, your losses, which is the main objective when you trade the financial market. So pay attention also to the Norwegian krone, also approaching the previous fractal support level, holding this double top, the neckline of that pattern, 1084. That's the neckline from the previous double top. So that level may actually work as a pressure level or a resistance level for the Norwegian krone. Before going into the crypto market, let's also approach the pound versus the Aussie. We called your attention to this move to the upside. I believe last week we have the golden Fibonacci level at 197.44. That's the level that I'm paying attention to, if the price will or not break above these levels, or if it will find some pressure and start moving lower again. Let's observe. Nice golden Fibonacci level, the pound versus the Aussie. Ascending channel, did not complete the bullish scrap pattern as we expected. In fact, as we can see, the market holded the 127% Fibonacci level, which opens the door to kind of a bullish butterfly pattern. Even though we have now a nice ascending channel and we are threatening the previous resistance at 165.79. Let's also see how the market unfolds. I admit more momentum towards the monthly fractal resistance 167.44. That's my expectation, a retest of this resistance level, and then the price may find some pressure and start moving lower again. We are already facing the daily fractal resistance for the pound versus the New Zealand, and this one I also want to share a very specific pattern that may also start to unfold. 127% Fibonacci extension and the golden Fibonacci level. So we have what we may call a potential bearish butterfly pattern at the 127% Fibonacci level, which lies at 214.65. Let me tag this one. 114.68, 114, basically 127% Fibonacci extension level that converges with the retest of this fractal resistance level printed at 2,150. So pay attention to a retest of that zone again for the pound versus the New Zealand. Finally, the dollar versus the CHF, the Swiss franc, a new lower low. And I projected this possibility a few weeks ago, the possibility to unfold into a 5-wave structure. We have the previous data, as we can see in red here to the downside. We have the market unfolding into a 5-wave structure to the downside, then the market unfolding into a 5-wave structure to the upside, and all those patterns. As we can see, we have a symmetrical projection between the wave 5 and wave 1, and once the price completes that sequence, you know, we start to see the price reacting and starting to reverse. So we have what we call I have what I call a 5-wave symmetrical patterns on both directions. And finally, the dollar versus CHF completed also not a symmetrical at this point. We were very close to complete that symmetry between the wave 5 and wave 1, but we have finally a new lower low, which opens the door to that specific sequence. So don't get surprised to see a reaction to the upside. Also, signs of divergence remains for the pair. So if the pair recovers above these fractal resistance at 85.37, this may trigger a false break of support. So a false break of support, as I mentioned before multiple times, usually the market tends to search for the golden Fibonacci extension level. So that points to 86.37. So if the price somehow breaks above this daily fractal, this will confirm a false break of the previous fractal support level, and as I said, usually the price will search for the golden Fibonacci extension level. That specific behavior also forms what we call the bearish shark pattern at the golden Fibonacci level. Okay, so we are already aware of that possibility. So the market, if the market breaks above the daily fractal, not only offers a move, you know, to the upside, we are talking about 100 points, 100 pips above the resistance. But once that pattern completes, pay attention to a retest of these highs again. So those 100 points may vanish very, very fast. So pay attention to these moves to the upside, may be a bit limited. And that completes my approach for today, of course, for the Forex market. Let's also decipher the crypto market. We have also the Bitcoin. Let me also check this potential retracement here. We are not close, but bullish butterfly pattern, 127% Fibonacci level. I was expecting lower prices, and I still am expecting lower prices for the, I need a retest of this support level. So I need to see the formation of this bullish crab pattern at the golden Fibonacci that points to 50k 600. But as we can see, the market is reacting to the golden Fibonacci extension level. This is also the default target for the hedging shoulders that I mentioned before, with targets projected at 53 296. So I admit a move from here, the continuation of this small move, a bounce for the crypto market and specifically for Bitcoin towards the 38% Fibonacci level. Very limited move, because these moves, this price level may act as a pressure level of resistance. We may see these levels forcing moves to the downside, and that's exactly what I want to see. I want to see the Bitcoin specifically finding some pressure at these 57,131 and then moving towards the previous fractal support level. If that happens, as I said before, we will complete the bullish crab pattern, and that may offer the same move, but with the possibility of a major reversal for the pair after retesting and rejecting to break below these lows. That's the main objective, is to retest this structure and see a reaction to the upside without breaking this previous support. Even if the market threats to break these lows, you know, you can see the price trading a few points below it, but I need to see a stronger reaction to the upside after the formation of that pattern. Let's finish for today with the Bund. We also called your attention to this structure last week. We have a nice ascending channel to the upside. Let me try to emphasize this channel for you. So we have a nice ascending channel, the price being pushed to the limits of the channel, and once I saw a retest of this structure support, we suggested this bullish momentum and actually based on the formation of this bullish crab pattern at 133.17, previous structure resistance acting as support, bullish crab pattern completed, triggering this bullish momentum. I called your attention to this resistance last week, I believe. So a move above this resistance level may trigger the retest of the previous fractal resistance. It doesn't look like it at least at this moment. It doesn't look it doesn't present that potential, you know. I believe, well, I don't want to anticipate, but we need to pay attention to the levels. I need to update this daily fractal support to the recent lows, 133.13. We have also the daily fractal resistance already adjusted to 134.78. So if the market breaks above the resistance, we may anticipate a move to the upside, but also pay attention to the eventual break of this fractal support level, 133.13. That will converge not only with the violation of the previous lows and the recovery of the previous resistance level, but also with the the violation of this momentum, the violation of this channel to the upside. If the price breaks below this fractal support, that will imply the interruption of this momentum. So that may force a deeper move to the downside. So I hope you enjoy and pay attention to the channel. Of course, I will cover other stuff during the week. I hope you enjoy the content. Stay tuned, and I hope to see you in the next video. See you there.